Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, Market Watch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. So, welcome to this podcast episode 113 titled Great Sustainable Stock Buys. It's presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investing mentoring, news, commentary, information, and resources. And look at my newly revised website at investingforthesoul.com. Tell me what you think. Now remember that you can find a full transcript and links to content, including stock symbols and bonus material, on this episode's podcast page located at investingforthesoul.com/podcasts. Also, a reminder, I do not evaluate any of the stocks or funds mentioned in these podcasts, nor do I receive any compensation from anyone covered in these podcasts. Furthermore, I will reveal to you any personal investments I have in the investments mentioned herein. Additionally, quotes about individual companies are brief. Please go to this podcast's webpage for links to the actual articles for more company and stock information. Also, some companies might be covered more than once, and there are also 11 article links below that time didn't allow me to review them here. The first article reflecting today's theme is titled 3 Sustainable Companies Helping to Solve Global Warming. It's by Leslie Norton and seen on Morningstar.com. Here's some of what Ms. Norton has to say. Zoetis. About 2/3 of Zoetis sales come from the pet business, which has doubled over the past 4 years. The rest of Zoetis sales comes from its livestock-related business. Morningstar Fair Value Estimate, $170. Morningstar Rating, 3 stars. Morningstar Uncertainty Rating, medium. Morningstar Economic Moat Rating, wide. Morningstar Comment, Zoetis enjoys a wide moat and secular tailwinds, notes Senior Analyst Debbie Wang. Next up is Stellantis. Stellantis is one of the world's top 5 automakers, with brands like Chrysler, Peugeot, Jeep, Maserati, and Alfa Romeo. Galvanized Global Equities thinks Stellantis' profitability can well exceed what the market expects. Even with the company's big investments, the stock trades at 1x earnings, according to Galvanize, creating a compelling entry point as the auto industry evolves for the low emissions era. Morningstar Fair Value Estimate, $43. Morningstar Rating, 5 stars. Morningstar Uncertainty Rating, high. Morningstar Economic Moat Rating, none. Morningstar Comment, Stellantis revenue and profit margins continue to impress, notes Senior Analyst Richard Hilgert. And last one, GFL Environmental. This Canadian waste management company services residential, commercial, municipal, industrial, and institutional customers. It is North America's fourth largest environmental services company. Recently, GFL announced a series of efforts to boost the capital it will commit to clean technologies and plans to align its executive compensation with climate targets. Morningstar quantitative fair value estimate $36.11. Morningstar quantitative rating 3 stars. Morningstar quantitative uncertainty rating high. Morningstar quantitative economic moat rating none. End quotes. Now, the majority of articles on sustainable companies continue to focus on renewable energy stocks. This is the first of two on that subject covered in today's podcast. It's titled Top Solar Stocks for Q3 2023 by Timothy Smith and found on Investopedia.com. Here's some of what Mr. Smith writes. 1. Best Value Solar Stocks. The solar stocks presented in the table below have the lowest 12-month trailing price-to-earnings ratio. We have first Daqo New Energy Corp. The Chinese-based company produces ultra-pure polysilicon used in solar cells, modules, ingots, and wafers. The trailing PE or price-earnings ratio is 2.6. Next up is Jinko Solar Holding Co. It offers solar modules, silicon wafers, solar cells, recovered silicon materials, and silicon ingots. The company reported in August that its second quarter module shipments increased 36.2% sequentially and 74.4% from a year earlier. The trailing price-earnings ratio is 4.9. Next is Canadian Solar Inc. It is known for its innovative photovoltaic technology and project development expertise. The trailing price-earnings ratio is 7.2. Next category is fastest-growing solar stocks. The top 3 solar stocks ranked by a growth model that scores companies based on a 50-50 weighting of their most recent quarterly year-over-year percentage revenue growth and most recent quarterly year-over-year earnings per share growth. First up is Canadian Solar. See company description above. Earnings per share growth 750%. Revenue growth 36%. Next is Solar Edge Technologies Inc. Manufactures and sells solar ingots, wafers, cells, modules, and other solar power and battery storage products globally. Earnings per share growth 681%. Revenue growth 35%. Next we have Herein Armstrong Sustainable Infrastructure Capital Inc. Provides capital and services to the energy efficiency, renewable energy, and other sustainable infrastructure markets in the U.S. Earnings per share growth not available. Revenue growth 155%. Next category, solar stocks with the most momentum. These solar stocks have delivered the highest total return over the past year. First is First Solar Inc. Provides photovoltaic solar energy products globally. 12-month trailing total return 69%. Next we have Array Technologies Inc. Specializes in solar tracking systems for utility-scale projects. 12-month trailing total return minus 7.1%. And lastly, Shoals Technologies Group Inc. provides electrical balance of systems products for solar energy projects. 12-month trailing total return minus 17.5%. End quotes. And the next article with this theme is titled Top 10 Renewable Energy Stocks to Invest in. It's by Jonathan Schramm and found on securities.io. Now some of what Mr. Schramm has to say about each of his picks. First off, he says, this list was made to reflect the diversity of the sector and is organized by market capitalization at the time of writing of this article. First, we have China Power Co. Limited. China Yangtze Power is the largest electric power company in China and the largest hydropower company in the world, with 71.7 gigawatt of total capacity installed. The company also has hydropower businesses in Brazil, Sudan, Pakistan, and Malaysia, and wind power generation in Germany. Next is Iberdrola SA. Iberdrola is one of the world leaders in green energy generation. Iberdrola operates mostly in Spain, with operations in the rest of Europe, North America, and Brazil. Next is Ørsted AS. The Danish energy producer has gone through a massive transformation from 2006, when it produced 83% of its power from fossil fuels, to 2022 with only 8% left over, and on track to reach 99% renewable production by 2025. Half of this power generation is from offshore wind farms, with the rest roughly equally split between solar and onshore wind farms. Ørsted has wind farms in Denmark, the UK, Germany, the US, Taiwan, and Vietnam. Next is Vestas Wind Systems AS. Vestas is a designer, manufacturer, and installer of wind turbines. It controls 35% of the wind manufacturing market, excluding China, up from 20% in 2010. It is also the only one with a strongly positive EBIT, that's earnings before interest and taxes, thanks to its economies of scale. Vestas has recently unveiled a new epoxy chemistry allowing for full recycling of wind turbine blades. Next is First Solar Inc. First Solar is the largest solar panel manufacturer in the USA and in the whole Western Hemisphere. The company uses its proprietary thin film photovoltaics based on cadmium telluride. They are more efficient, are produced at a lower cost, and can be easily mass manufactured. Thin film solar panels are also more durable, retaining 89% of the original performance after 30 years. Thin film panels can also have high recycling rate. And next we have Brookfield Renewable Partners LP. Brookfield Renewable Partners, or BEP, is part of the massive asset management firm Brookfield, handling $625 billion in assets, and which owns 48% of BEP. The current assets are a mix between hydropower, wind, and solar, with the bulk of the future production growth planned to be in solar, followed by energy storage and wind. Another important development for BEP in 2023 is the closing of the acquisition of Westinghouse, the leading nuclear plant builder in North America. BEP has generated annualized returns of 16% for its shareholders since 1999. It also distributes a rather generous dividend. Next we have Ormat Technologies Inc. Ormat is the second largest geothermal owner and operator, and the largest publicly traded. The company has assets in the US, Kenya, Indonesia, and Central America and Caribbean. Ormat is also entering the energy storage market. Revenues grew by 10.7% in 2022, maintaining a strong growth trajectory since 2017. Geothermal is able to provide stable baseload power and benefit from quickly improving technology. Next we have Shoals Technologies Group, Inc. Shoals is specialized in electrical balance of system, or all the systems surrounding the solar panel themselves and which are required to make it work. This does not include inverters, but cables, switches, fuses, electric boxes, etc. Between 2020 and 2022, Shoals has grown its revenues by 36% compound annual growth rate, and its gross profit by 40% compounded annual growth rate. Next we have Daqo New Energy Corp. This Chinese company is one of the world's leaders in polysilicon production, the central component for solar panel manufacturing. In 2023, the stock is trading very cheaply compared to price earnings or cash flow. This is partially due to controversies, with the company linked to the use of forced labor in Xinjiang and talks in Washington, D.C. of additional sanctions against companies operating in the region. Next we have Jinko Solar Holding Co. Limited. Jinko is one of the largest solar panel manufacturers in the world, based mostly in China. The company is diversifying its manufacturing base with silicon wafer manufacturing in Vietnam and solar cell manufacturing in Malaysia and the US. Module shipments to China have doubled year to year and increased 50% for Europe. Jinko's most advanced solar cell, the N-type, achieves a remarkably high 25.8% energy efficiency. End quotes. And we have this from Australia. It's titled 3 ASX Shares for Sustainable Investment Returns, and it's by Damien Cotier and seen on raskmedia.com.au. Here are some quotes from Mr. Cotier about his picks. First off is Telix Pharmaceuticals. The global sales of its Illuccix product for the imaging of prostate cancer continue to exceed market expectations, and urologists are seeing patient benefits from the technology. Telix's product, which aims to distinguish between benign and malignant renal lesions, had previously received breakthrough designation from the U.S. Food and Drug Administration. Current imaging cannot reliably make this distinction, leading to invasive biopsy procedures that are not always necessary, as up to 80% are not malignant. Next is Alpha HPA Limited, specializes in low-cost, low-carbon, high-purity alumina. These ingredients have applications mostly across lithium-ion batteries, semiconductors, and LED lights, all critical to decarbonization. Earlier in the year, Alpha HPA announced it reached an agreement with Austrian-based global industrial company Ebner Industrie Offenbau GmbH to enable Alpha to produce synthetic sapphire glass, which is a downstream product of the company's high-purity alumina HPA production process. And the last of the three, Calyx Limited. It is an industrial solutions company dedicated to solving global sustainability challenges, including Calyx's Lilac technology assists in CO2 mitigation in the global lime and cement industry. Joint venture with Pilbara Minerals Limited for more efficient and less carbon-intensive processing of lithium ore. And adapting the core Lilac technology for other applications with support from government agencies globally, including zero-emission steel, sustainable marine and aviation fuels, and zero-emissions shipping." End quotes. Other honorable mentions. These are articles I didn't have time to review in this podcast, not in any order. Title: UN SDGs seriously off track as investors question portfolio alignment on ETFstream.com by Theo Andrew. 2. Title: guidingdirection.com on abyok.com by Conscious Capital. 3. Title: How a top-performing ESG fund invests in energy stocks on barron's.com by Lewis Brum. 4. Title: AMCR named a top socially responsible dividend stock on nasdaq.com by BNK Invest. 5. Title: Why PNC Financial Services Group is a top socially responsible dividend stock on J2T.com by Just to Trade. 6. Title: Top 10 wind turbine manufacturers in Energy Magazine on energydigital.com by Charlie King. 7. Title: Top 10 solar companies in Energy Magazine on energydigital.com, again by Charlie King. 8. Title: Green bonds can drive EM renewables adoption on ETF Trends by Tom Liddon. 9. Title: Enphase Energy, a solar power gem trading below its true worth on seekingalpha.com by The Beginner Investor. 10. Title: These 5 small cap impact stocks are punching above their weight in addressing social and economic challenges on nasdaq.com by Ari Zoldan. 11. Title: 3 expert-picked funds that want to grow your money sustainably on fidelity.co.uk by Nafisa Zaman. Well, these are my top news stories with their stock and fund tips for this podcast titled Great Sustainable Stock Buys. Now, please be sure to click the like and subscribe buttons on Apple Podcasts, Google Podcasts, or wherever you download or listen to this podcast. That helps bring these podcasts to others like you. And please click the share buttons to share this podcast with your friends and family. Let's promote ethical and sustainable investing as a force for hope and prosperity in these very troubled times. Contact me if you have any questions. And again, please look at my new totally revised website at investingforthesoul.com. Tell me what you think. Talk to you next on September 22nd. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY ethical sustainable investing pace tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.